where do you think we are in the market cycle?
In terms of are we at euphoria or are we at pessimism, I think we're more like it's optimistic, right? Every CEO, corporate we talk to at the moment, they're saying, things are looking very optimistic for the Australian economy and their company operating within that economy pretty much across the board. That's quite a broad trend. Euphoria, there's certain sectors, clearly unprofitable tech, the SPACs, the Bitcoins. We've seen a lot of speculative behaviour this year and the last sort of 6-12 months, and that's starting to unwind. With the threat of inflation and the threat of rising bond yields, we're actually seeing those, questions over the valuations of those unprofitable areas of the market.
At the moment, I think we're at an optimistic stage, but I think there's a caution to it, and you just got to think about the fact we're talking about inflation here, and things like geopolitics. We don't understand the COVID risks, still playing out tragically in India and the like. So I think there's a cautious optimism. And the optimism still comes from the fact that the bond market is at historic lows, and that's good for the equity market. But I think we've had elements of euphoria. We saw it last year in, say, big tech. We're seeing the cryptocurrencies. So it's in areas now, but geez, that's come back a fair bit now with like sort of the big tech stocks correcting from their highs with the sort of inflation. So I think we're shifting from pockets of euphoria to an optimism, but caution's definitely creeping in.
Well, I think, if you say the full extended market cycle is kind of euphoria, I don't think we're there yet, given, the outcome and...
Even with what we're seeing in cryptocurrencies right now?
Well, yeah, good observation. Look, I think cryptocurrencies are a market that is heavily influenced by retail investors. And part of the reason for that is it's a developing market. It's not yet a deep market. It's not yet a massive market like, obviously fixed interest government bonds and the major equity markets and even currency markets. So there is still concern. So that's why by professional investors about the economic rebound, about potential higher inflation, about the sustainability of the economic rebound, that I don't think we're quite at the euphoria stage of market. So it's certainly optimistic, and that's, as you know, only been played out in terms of, consumer sentiment and business sentiment's really very strong, certainly here and in the US, not necessarily in all parts of Europe.
We're optimistic to euphoric. I think the outlook you can be optimistic about, especially in Australia and also the US. There is some euphoria if we look at what's going on in, say, Bitcoin and particular sectors of the market, unprofitable tech, where the valuations are just eye-watering. But on the whole, I would say optimism is the way I would characterise it.
The market is drunk with liquidity at the moment. It's had an enormous amount of government intervention, central bank intervention. So I don't know that I can honestly answer that. All I can say is that it's just an unusual set of circumstances, and trying to come to grips with, as I say, the enduring impacts of all those different inputs, QE, low interest rates, and as I say, direct government intervention, that's a tricky one.
Yeah, I mean, I would kind of look at it as cycles within cycles. In the kind of near term, yeah, there's signs of some market fatigue. When you have markets travel this fast in 12 months, they tend to kind of collapse a little bit under their own weight. So, we wouldn't be surprised if there was a bit of a weak patch, mid this year, later this year. But if you step back a bit from that, in the broader market cycle, there's so much liquidity that's been put into the global economy to get us out of the impacts of the pandemic. And so much of that is flowing through into asset prices, asset valuations, and that's not going to be unwound anytime soon. So a little bit of a pause, but then on a bigger picture basis, we think there's still room for optimism to continue to build.
Well, very hard to argue that we are not late in the market cycle. We are at a very mature stage of the market. The market's been rallying very hard out of the March 2009 lows. And of course, we had an important retest in March of last year. which was eagerly bought out, which I'm pleased to report on. So I think we are in a market that is, in the words of Sir John Templeton, we are approaching the euphoric stages of the market. So whilst we have pockets of euphoria, I think the market can continue to rally in recognition of the earnings recovery and the fact that liquidity remains very supportive. So no correction of any large scale, Ali, being forecast here. But naturally along the way we'll have sell-offs that will restore pricing to more sensible levels, but no major cataclysmic correction is on the horizon from what I can see.
I think optimism. I put us in the optimistic camp. I think if you look back at last year, we sort of cast away the pessimism and scepticism of last year. I think a really good way of looking at that is just having a look at as I said before, the inflation-linked market in bonds. Last year, the market was pricing central banks around the world to miss the inflation targets forever. Not even come close. So it's very pessimistic and hugely sceptical that they'll ever be able to achieve it. And now, as I said, they're roughly close to targets now. So certainly not euphoric in that market, but more optimistic that as we traverse through the second half of this year, where I think the market is more pricing in an optimistic path to a post-pandemic world now. I certainly don't think we've hit the point of euphoria. I think interest rates would be a lot higher if that was the case. Inflation expectations would be higher. Perhaps when we can travel interstate and overseas again and reconnect with friends and family and eat at restaurants like this with our QR codes stuck to the menu, perhaps we'll get there. But I think at the moment, optimistic would be a reasonable characterisation of financial markets.
In terms of the market cycle, we always have a phrase or an acronym we use to describe this internally. So we call it the Crick cycle. So you have the crisis, you have the response, you have the improvement, and then you have the complacency. So we think that we're more towards the end of complacency. Now, there's a lot of obvious warning signs. We've all heard about the retail behaviour, new issuance in markets, SPACs, cryptocurrencies.
Yeah.
Absolutely. So this is all something, central banks opened the floodgates of stimulus. A lot of this money is finding a home in markets, and risk appetite has increased dramatically. What I would say, if we're in that complacency phase, if we are in this period of euphoria, is we're really focused in not trying to figure out which phase we're in, but it's almost trying to figure out the timeline or acknowledge that it's very hard to predict where you are, because if we're in the later stages of, dare I say it, a bubble, there's a very big difference between being late cycle or early stage bubble. And you think back to the tech bubble, we had very smart people, Alan Greenspan, was talking about irrational exuberance back in '96. And there was a lot more to run in markets for the following 4 years. So we think that we're somewhere in that sort of extreme sentiment phase, but we're not really trying to rush into getting overly defensive right now.
It's not a normal cycle. I think if you look at the market cycle in terms of what's priced into asset markets, you say you're pretty late cycle. You're kind of somewhere close to, you're maybe not euphoria, but you're sort of heading up on that end of the spectrum. I think if you look at the economic cycle, you're probably further back. And I think that the fact that the economic cycle has still got more to run is something that's kind of supporting the market cycle. So, I guess it's hard to kind of say we're exactly here, because it is a very unusual cycle.
I think there's probably still a reasonable amount of optimism in the market today. I think certainly if you one sort of lens, not necessarily always correlated to the market, but one sort of lens of looking at it is just growth. If you look at all the forecasts for GDP growth, they all look rosy. They paint a fantastic picture, not only just this year but beyond. Sort of some reasonably strong growth numbers coming down. Now, some of that is a bit of a bounce off the depths of the pandemic and what happened to economies, but I think that as a forward-looking indicator is certainly something that's a positive, so people are sort of looking at that. Now, that doesn't always correlate to returns in the market, but the medium-term outlook for growth seems to be strong. And that would suggest that people are somewhat optimistic of at least the next couple of years, so to speak.